Hey everyone, welcome back to your weekly market outlook. This is for the 14th to the 18th of August 2023. Let's take a quick recap on last week, a really quick one because we don't have anything much going on from last week. We don't see a lot of movement even with the UK GDP. I think the whole market was pretty much driven by the inflation numbers coming up from the US. Now let's take a look at the inflation numbers. So we've got a 3%, which is the previous number. It went up to 3.2%. It is still below consensus of 3.3%, but consider this as the first time in 13 months that we've seen an increase in the headline inflation coming out from the US. Now the core inflation does come down a little bit lower at 4.7%. This was actually the consensus before the adjustment leading up to the news, which was adjusted to 4.8%. So I think in terms of core inflation, sure, there's a little bit of a drop here, but it's not as significant. But the increase by 0.2% in the headline inflation, that's pretty much what's driving the market. It's pretty much indicating that the FOMC might still have more room to go. In addition to that, we see the continued rally in the US dollar, followed by the PPI numbers coming out that came out on Friday. So we've got the CPI on Thursday, we've got the PPI on Friday. The PPI on Friday, again, that was above the consensus. It was a jump from 0% to 0.3%. So we're looking at inflation heating up again in the US. So overall, that's pretty much what's driving the market in terms of the US dollar strength. Taking a look at this week, we don't actually have a lot. We practically have nothing important on Monday. On Tuesday, we've got the RBA meeting minutes as well as the industrial production coming out from China. This too is likely going to move the Australian dollars and gold and oil as well. So with the RBA meeting minutes, we don't have any more surprises coming out from the RBA. With a pause, I think we're still going to be looking at the same language given out by them, which is a little bit more on the neutral dovish side. I think that's still expected to come out from the RBA meeting minutes on Tuesday. Industrial production from China, obviously, this is going to be a good indication of whether or not there's actually going to be that demand for oil in China. And then we have the Canadian inflation rate, probably not as significant, but we're still looking at a little bit of a increase in inflation in Canada. We've got the US retail sales number, also expecting a little bit of an increase in the US retail sales number. And then we have the UK inflation numbers. Now the UK inflation numbers, if we take a look at the consensus here, it is quite a huge expectation from the UK inflation number. Again, previous number was 7.9%. The consensus was 6.8%. I'm not quite sure if we're actually going to be seeing that 1.1% drop on the UK inflation, but probably looking at about 7%. For the inflation, I think that's a little bit more realistic expectation coming out from the UK side of things. And then we have the FOMC meeting minutes. Obviously, every traders are just going to come through for any information or any hints given that whether or not the FOMC is going to continue to hike. But again, this is from the previous meeting. We're not going to get that meeting until next month in September, and before that meeting comes out, obviously we have another NFP numbers. We've got another inflation number to consider as well. But just judging by the current sentiment in the market with the increase in inflation in the US, both on the CPI side as well as the PPI front, obviously traders are going to be a little bit more nervous, and they're going to come through for any hints of hawkishness coming out from the FOMC meeting minutes from the previous ones. But again, that's also going to add up, or that's just going to fuel more bullish sentiment for the US dollar SF. We've got the Japanese inflation rate. Again, we've got 3.3%. The forecast is still a little bit higher at 3.4%. We don't have the final consensus as of yet, but we can use the forecast for a little bit of an indication. We've got 3.3%, expecting it to go up a little bit to 3.4%. So it might stay at 3.3%. It could also go up to 3.4%. Now, retail sales from the UK, this one here is expected to shrink a little bit from 0.7% to negative 0.5% growth on the retail sales front. All right. Let's take a look at the technical sales here. Obviously, there was that concern last week when I mentioned that, The fundamentals is not sitting too well with technicals, but right now technicals are a little bit more aligned. We don't have that overbought condition. The stochastics didn't drop down below 80 for the dollar index here, and we can see that bounce happening on the dollar index. It came out of that range between 102 102.50. Right now this is above that. This is closer to 103 at this point in time. If you take a look at the transition here, this is also in line with the Ichimoku Kinko here. This is where it's kind of the thinnest. This week is basically going to be the thinnest portion of the Ichimoku cloud, so obviously this is very easy to transition over, and if this one continues to press towards 103.50, then it's likely going to give that transition on from a downtrend to an uptrend for the dollar index. So just keep that in mind for the dollar index and the US dollar going forward. Aussie USD here, we mentioned this. We've got that double top at 69 cents, breaking the neckline at 66 cents. This was on track for further drop towards 64 cents. Right now we're looking at 64.16, where the 161.8% on the daily time frame is located to be the expected target for the Aussie USD. Momentum still points to the downside. It's still way below 20, so we can still see further progress to the downside for the Aussie USD. The Euro USD, as I mentioned, this one here is going to be a little bit flat, and that's basically what we got. We got a little bit of a flat movement on the Euro USD. We have that 1.1 level capping the market from further progress, but at the same time, we're still looking at support coming in at 1.0925, 1.09. So until that happens, until we see a break on either side, we're still likely going to be, trading in that particular range between 1.09 to 1.1. Take a look at the weekly pivots and support here. This is pretty much in line with a pivot lining up at 1.0980, and the support 1 is located at 1.09. Support 2 is located at 1.0840, or pretty much close to 1.0850. So we're still going to be looking at stronger support come in for the Euro USD at 1.0850 and 1.09. So obviously from the Ichimoku cloud, there's a thin portion here, very similar to the dollar index, where the dollar index has started to transition. The Euro USD hasn't done that, so I think we saw that break below 1.09, 1.0850. Ideally, we want to see that break below 1.0850 to confirm any potential reversal in the Euro USD. If you lose 1.0850, then it opens out further progress towards 1.07 for the Euro USD. Obviously on the top side, we've got 1.1 and ultimately 1.11 acting as a resistance. The pound USD, again, we're looking at that scenario where it could just remain sideways and then it would likely transition across the Ichimoku cloud, and that's basically what we're looking at right now for the pound USD here. This one here is still capped by 1.28. We're still struggling to gain momentum above 1.27. So right now we're still looking at that range between 1.26, 1.27. If you take a look at the pivot and also the support 1 and support 2, it is pretty much located at 1.2725 as a pivot, and that would be your resistance for this week. And support wise, ranges from 1.263 to 1.2570, but we're going to be looking at 1.26 as kind of the main support for the pound USD. This one here, taking a look at the momentum here, there's still room to go to the downside, but I don't expect crazy movement on the pound USD here. Maybe not until the UK inflation came out, but we're expecting a little bit more of a sideways market condition for the pound USD. The dollar Japanese yen, we always mention that this is eventually going to come back to 145, and we basically saw that right now it is at 145. Obviously at this level, a lot of traders are going to be focused on whether or not there's going to be intervention coming up from the Ministry of Finance in Japan, or is it going to be Bank of Japan, intervening in the market. But yeah, I think there's definitely going to be fear at 145. We can see the market slowing down at 145. Obviously, if the US dollar strengthens that much and the momentum and the sentiment really shift to the more bullish side for the US dollar, that could drive this higher. But if we take a look at the weekly pivots, right now we've got resistance 1 and resistance 2 pretty much likely going to cap the progress to the upside, right? We've got resistance 1 at about 146 and resistance 2 at pretty much 147. Now 147.20, it's also where the 127.2% extension on the daily is located. So sure, if it's if there's enough demand for the dollar Japanese yen to take it above 145, then yeah, it opens up further progress potentially towards 147. But again, I think 145 is going to be a level where a lot of traders are going to be a lot more cautious. So we want to see how price reacts to 145 on an intraday scale. Obviously, in terms of the daily chart here, we might see further progress to the downside. We don't have any transition in the momentum, but it would be more visible on the hourly time frame if there's actually going to be any reaction around 145. But yeah, again, looking for demand to build up at 145, right? If it remains sideways at 145, they might actually reset the momentum on the hourly time frame. That's when a lot of traders would probably realize, look, I think 145 is not going to last long. They might take it a little bit higher, and that's basically what we're eyeing for this week. We really want to see that price reaction around 145. Okay, so all right, so that's pretty much it for this week. Quick and easy. So good luck with your trades, and I'll see you soon.